but let me go across now to our special markets guest Nitin Jain, who joins us for a sense. Nitin, what's happened really in the last 1 hour? Explain to us. Is it just Europe, global cues, or anything else that's clearly leading to the sell-off?
I think it's a combination of a lot of factors, but if you see where we stand in terms of overall valuations, I'm sure we are reasonably stretched with any other market, whether it's emerging markets or developed markets. We have had a great run for the last 4 or 5 months, particularly after the elections. And I think you've reached a stage where incremental buying has obviously slowed down. FIs have turned net sellers. And for the time being, it seems like the global markets are also not in good shape. And hence, I see this as a part of a correction in a major uptrend.
So you're saying that the correction will continue, the sell-off will continue in the next few sessions. Is that a trend we can expect?
See, I won't say that, see, markets don't go up in a straight line or they don't go down in a straight line. But if you were to ask me for the next 2 to 3 months, net, I would not be extremely bullish on equities, only from a short-term point of view, and that too at a headline level. But if you're a stock picker, if you have patience and if you're looking to invest maybe over the next 9 to 12 months, then I still don't see a significant downside from these levels, and you have a reasonably favorable risk reward if you have a horizon of at least a year from here on.
But you're saying short-term, 3-month horizon, there is risk and you can expect more downside. Is that a correct assessment?
That's right.
Okay, so short-term, there is a risk. Would you like to talk about certain levels as far as the Nifty goes?
See, I would not be able to comment too much on the levels, but another 5% kind of a correction would not be way off from the normal course of market point of view.
And 4 to 5% correction that you're talking about in the next couple of months, and that's the short-term risk you're talking about. Triggers that you think we need to really watch out for as far as this market is concerned, major downside risks?
I think it's global clues. Most of the risk right now is stemming from the global clues. You look at the inflation numbers in Europe, you look at how the 10-year yield is moving in US, and so I think net it is mostly the fact that markets had rallied ahead of earnings, and suddenly you are seeing global markets not rewarding very much, and hence you are seeing some kind of a cool off. I would not still say that it's a downtrend. And I think those are the two things that you should keep a watch on, Europe and US. If they continue to disappoint, I think it is likely that we will drift downwards.
And you're saying that even the positive news for the Indian market that we've been talking about, the huge benefit that we would get in terms of crude prices softening, now that's a big positive for the Indian markets. You've got the current account deficit that will look much prettier than what the government had even projected earlier. You've got positive news on the political front, more stability coming in if Haryana and Maharashtra go the way the exit polls are predicting. So are you saying markets will right now discount that good news on the domestic front and focus only on the global factors?
See, all I'm saying is that for the next couple of months, simply because markets are very stretched, I think you might see some kind of volatility, and it will be a tussle. If the global news flow is very negative, I think you might see downside. Vis-a-vis, as you rightly pointed out, not only that, I think there is another very big positive news on the domestic side. I think it is the fact that CPI seems to be tapering off after a very, very long time. So CPI and WPI are at reasonably historic lows for the last 2, 3, 4 years, and hence I think that's the reason for my primary hypothesis that it's just a minor correction which you have to just see off. And I think if you have any what should I say, reasonable horizon in your investments, greater than a year or so, I don't see this as a major disappointment. I just think this is part profit booking, part a little shakeout of the excesses that had got built in some of the stocks.
Okay, I'm not even talking short term now, I'm talking almost immediate term. Are there other levels or anything that you'd like to talk about at least up till Diwali, the next few sessions?
No, that's very, very difficult to predict, but if I was a trader today, I would not be going long for sure.
Okay, let's talk sector specific and stock specific now. First, sectors that you continue to be bullish on, even though you're saying that a correction is in the offing.
See, See, there are a couple of opportunities which we are very excited about, particularly in financial services space. I think if you look at some of the NBFCs, stocks like Repco Home Finance, stocks like Sundaram Finance, I think they're great opportunities, great companies, very solid business model, great ROEs, great return ratio, all kind of ratios if you look at them, I mean upwards of 20-22% kind of returns. So, and trading at reasonable valuations. I think most of these stocks are trading at anywhere between 2 to 2.5 times forward. So these kind of stocks, and even in this kind of correction, you would have seen that they're hardly reacting. So quality stocks which are strong business model, where I mean visibility of growth is not an issue, are continuing to do well. And so I do believe this space will continue to do extremely well over the next 3-4 years actually. The other space that we like is also capital goods now. I think our bet is that the economy will eventually turn around. Already you are seeing an uptick in terms of GDP. You saw a number of 5.7%, which was a significant upside from what the markets were expecting at least 2, 3, 4 months back. So I think if that were to happen, I think capital goods and even infrastructure for that matter, I think these are the two sectors which will benefit. Though infrastructure has issues in terms of listed players, most of the players actually in that space are very severely hurt on the balance sheet, and some of them might not do well, but overall these two spaces can do very well.
Okay, we've got the markets clearly slightly off from the day's lows, but still trading extremely weak right now. The Nifty now down about 124 points, 77.40 on the Nifty, and the Sensex now trading about 374 points in the red. Let me talk about the IT pack very quickly with you, Nitin, before the closing bell really rings. Infosys, TCS, of course, TCS numbers expected later today. TCS is losing in trade today, 1.36% off on TCS, but on Infosys, pardon me. But your really take on Infi and TCS, some of these important IT counters.
See, most of these companies, I think they have very strong business models and have done extremely well despite reasonably tough environment, especially the large cap IT companies. And I think if you are an investor, if you have a reasonable time horizon, I don't think there is anything to worry about these stocks. Infosys is still trading at around 18 times forward, and I think most of these companies will actually surprise you slightly on the upside over the next couple of years in terms of their earnings growth. I would be definitely on the buy side of IT and particularly these two stocks.
Okay, very quickly we could note DLF today because that's a counter that's gained in an otherwise very weak market that has seen a sea of red, but you've got DLF today gaining 5% gain on that counter after the bloodbath that we saw in the previous session. It's gained about 5 rupees and huge volumes there, and this does factor in the kind of volumes we had seen on the day the stock was hammered because of the SEBI order, but despite that the volumes continue to be absolutely impressive. Very quick take, Nitin, on that counter.
See, I would like to avoid DLF at this point of time. I think a lot of people get affected by looking at the prices because market cap gets reflected in prices, but generally the metric to look at stocks or valuations is not only market cap, but it's generally enterprise value. If you see the enterprise value of the stock, which means 22,000 crore of debt, and I think current market cap would be around 15 to 17,000 crore depending on where the stock is, I think it is still reasonably expensive, and with so many headwinds and so many regulatory issues, I think there are much better bets in the market to focus on right now.
All right, but there are clearly those who bought and have booked their profit today as far as that counter is concerned. But we've just got less than a minute to go for the closing, and let's take a look at some of the big losers there in the market today. You've got the Nifty now obviously down majorly about 125 points off on the Nifty, but DLF among the gainers, ITC among the gainers, NTPC, Hindalco, big losers there. BHEL off about 3%, Tata Steel losing over 4%, Tata Motors down less than 1%, Power Grid 2% off on that counter, ONGC 1.75% off, Sesa Sterlite down about 4%. NMDC among the few gainers in today's market, 2.4% gains on NMDC. KN India also losing over 3%. Reliance also down over 3%. IDFC down over 3%. So it's clearly a sea of red as far as some of those big heavyweight stocks are concerned. 3.85% off on Tata Power, Bharti Airtel over 2%. HDFC over 2%. Coal India gaining less than 1%, but again one of those few gainers there in in today's market, and you've got the closing bell finally ringing with ICICI Bank closing in the red, TCS closing in the red ahead of its numbers. SBI losing nearly 2%, Wipro losing over 1%, Cipla down also almost flat out there, Sun Pharma also in the red. Those are some of the top counters that are showing heavy losses. L&T also down about 1.3% gain among the few gainers in today's trade. BOB they're losing about 0.5%, Asian Paints down about 3.5%, Infosys down over 1%, HUL also down over 0.5%, M&M losing over 4.5%. So those are some of the big counters that have shown tremendous losses there. Let's look at some of the small cap stocks with Pankaj.
If you look at some of the counters where there was some selling pressure in terms of the last 1 hour, I want to start with Godrej Consumers. It's down about 8% the last I checked. Maybe the average closing maybe just about 7%. It's about 6.9%. Bajaj Finserv 7%. Crompton Greaves, they declared their numbers. We'll do the preview in just a bit. 6% down. GSFC, they declared their numbers yesterday, 10% lower. Sundaram Fasteners 7.5. Sterlite Technologies 6.9. Aarti Industries down. Lanco Gati was a big mover on Friday, on Tuesday, and today lost about 8%. Tata Sponge, they declared their numbers yesterday. Numbers were broadly in line, but the counter really had a sell-off. Simplex Infra, NCC from the infrastructure space down anywhere between about 6 to 8%. Hotel Leela Ventures, United Breweries, McLeod Russell, these are from the FMCG pack, or largely catering in towards the consumers, 5 to 7% lower. Strides Arcolab, it got ex-dividend, and then after that also it fell about 6%. So that was a big loser despite that big 100 rupee dividend coming in. UPL was down about 7%, again a big mover on Tuesday. Amtech Auto was down about 7%. Century Textile, Anand Raj, Arvind Limited, all of them down about 5 to 6% each with good amount of volume. Tata Communication down about 5%. Ashok Leyland down close to 4%. Bharat Forge down about 2.5 to 3%. Volumes on Bharat Forge still, one would say, not that heavy. Apollo Hospital down about 4.1%. Motherson Sumi down 4%. UCO Bank down close to 4%. Jet Airways, Jain Irrigation, IFCI, all were among the big volume losers. IVRCL, Mastech, BF Utility also declined. Volumes on BF Utility particularly were quite high. Delta Corp declares their numbers today. Usually comes about 9-10 in the night, so 5 million shares traded, but 6% lower. SRF, NBCC down. BF Utility, IVRCL, Mastech all on your screen. Butchered today about 5 to 7%. These were some of the well-tracked companies which had slight bit of selling pressure towards the second half.
All right, tremendous selling pressure there as far as the indices, those specific stocks are concerned. Sanjeev, we're seeing your view on a market that has clearly shown tremendous selling pressure, that is closed deep in the red on a day that didn't look like it would end like that.
Yeah, so Sweta, I think this has been 2.5 months coming. The global cues have continued to worsen, but the underlying fundamentals means the macro improvement for India is a standout. So we are saying use this opportunity, ignore the rhetoric, get into stocks. This is an excellent opportunity to buy. Slowly but surely you've got a handle on inflation. Bond yields are at the lowest they've been in the last 3 years. The rupee is in a little bit of a downside, but I don't think it will break 62 on the weakness side, and we think oil prices are well and truly in a bear market. You have to take advantage of this, whether you buy oil marketing or you buy financials or you buy tire stocks or you buy paint stocks. There is a whole world of opportunity. We are saying use this decline because the global outlook could worsen, but for India to stand out is a clear opportunity, and we think next week onwards, Diwali particularly, we think we should be headed for much better time.
So what are you going to do tomorrow, Sanjeev?
Morning. Tomorrow, like I said, I don't have a handle on the volatility as Mercury is retrograde, so every day you are going to see this volatility. But I'm saying Monday onwards, come Monday, and I'll be putting where my money is, where my mouth is. So Monday onwards, Sweta, we are on a different wicket, and I still stand by that.
So correction continues tomorrow, but Monday you're saying is a different day.
See, tomorrow could be another reversal because globally you've fallen so much. I would expect the Dow and the other indices to stabilize here, and who knows, tomorrow you could be in for another blockbuster rally like you saw fall today. So the trading side of the market is in a total seesaw, but we are seeing Monday onwards a lot of stability returns, and I would be betting on the long side definitely, mostly in the financials and in the oil marketing companies.
Sanjeev continues to be the optimist that he is, Pankaj. Despite those planetary positions that he is talking about, despite his astrological predictions, he is still hoping for a blockbuster rally tomorrow.
No, that's precisely what I want to ask him. That is Monday something changing on astrology that
yes,
he's so bullish from Monday. So is anything changing, or you would wait for any dates that you can give us except for Monday?
Well, if you want to hear it, then Venus is the only planet which overnight turns from despair into ecstasy. So it's debilitated in Virgo, and on Sunday morning it goes into Libra where it's exalted. So Monday could be a blockbuster day. Just watch out.
Alright, Monday could be a blockbuster day. We're going to hold Sanjeev Bhasin to it on Monday, but for now we've got a market that has clearly ended deep in the red, the Sensex and the Nifty. Sensex closing below the 26,000 levels, Pankaj. That's something that was clearly coming as a surprise on a day that we didn't think would happen like that. The Sensex red closing at 349 in the red. We're going to slip into a quick break at this point, but we'll be back with some important interviews on the other side.